Good day, fellow investors. Welcome to the YouTube investing channel where we discuss things that really matter to your portfolio over the long term. Something that will have a big impact on the financial world in the coming years is the recent Ray Dalio warning about bonds. Ray Dalio was very prescient. This is in 2019. He called modern monetary theory, helicopter money coming, and we are now having that as a normal. Of course, he also got the 2008 debt crisis right. We made a video about how he said cash is trash, and given what's going on in the markets with financial assets, real estate, he was correct on that too. And now he is saying that why the hell would you own dollar-denominated debt? So he said cash is trash. He says now bonds are trash and are in a bubble. Cash is even trashier for that matter. And we are going to cover this because it will have a huge impact on how the financial world looks like in the next 10 years and also on your portfolio. We have a lot to cover, a lot to explain. We'll start with the bond danger, too much debt, the bond bubble, how it can burst if the dollar loses the reserve currency power, because too much printing, too much taking advantage of that is too much. We're going to touch on capital controls that have already started happening and are a typical denominator of the late part of the economic cycle, the late part of the debt cycle, which we are now in, and we have to invest accordingly. We'll go through what Ray Dalio says, and you will see how you can improve your portfolio for long-term investing success. If you get value from this, please click that like button. That's all I ask. So let's start. Bonds offer ridiculous yields, negative yields. If you put your money into a bond, you are guaranteed to lose purchasing power over the next period, over the period of the bond. So it is stupid to invest in bonds because you are having a guarantee that you will lose. There is no risk, there is guarantee of losing money. And if we look at the incredibly low yields that the bond market has, from a historical average of 5, 6, 7, 8% on the 10-year treasury note, we have touched real bottoms with 0.5 this year in August. And now, as the market has started seeing that this is not sane, the yield has started going up and now it's 1.7, but still from a historical perspective is extremely low. And if we look at real yields, if we deduct inflation from the 10-year treasury, then things are even worse, because you see that real yields are very negative. So you are losing purchasing power if you lend money to the US government and other institutions like corporations for that matter. And here you see the spread between the nominal yield over time and the real yield. Even with very high nominal yields in the 70s, the real yield was very, very negative, and bonds were called certificates of confiscation in the 1970s. Then we enjoyed the biggest bull market for bonds in history, with yields going down, down, and down, and now it's time for this bull market to end because it's not sane to own bonds. However, the world is overweight bonds. Everybody has bonds. For example, CalPERS, California Teachers Pension Fund, has 25% of its assets and more in bonds. And Ray Dalio just said that bonds are trash and it's not sane, it's stupid to own them. So 121 billion of the California Pension Teachers Fund is stupid. And if we look at other pension funds allocation, for example, in the Netherlands, 50% is invested in bonds that have negative real yields. United States, on average, pension funds 25% in bonds and other common investment vehicles, so probably another 50%, so around 40% in bonds. Germany also 50% in bonds, so a lot of risk there for pension funds. And this is a huge problem because these pension funds invest your money so that you can have purchasing power down the road when you retire. If the real yield is negative, you are losing purchasing power over time, which is insane. It's not what they are paid to do. Why are they investing? Because they don't care. CalPERS get 0.9% per year, no matter where the money is invested. They don't care about your success. They care about putting money in their pockets, all the pension funds. That's how it works. And now Ray Dalio says that bonds are trash. If you just take a normal logical perspective, it takes you 42 years to get your money back if you invest in US treasuries. 450 years if you invest in European government bonds, same in Japan, and a little bit less in China, around 25 years. So the best yields for now are in China. And the other things are completely ridiculous. What's the point of getting your money back in 450 years? But my pension fund is extremely happy with that. And Dalio says it's simply stupid. And this leads to huge dangers and a big bond bubble that will lead also to currency bubbles and currency issues down the road. If we look at the global bond market, the global bond market is around 130 trillion now. Of that, 46 trillion is in the United States, 50 trillion in other developed countries, and just 27 trillion in emerging markets. So what we are, 300 something million people, another billion people, 5 billion people in emerging markets with low debt compared to the number of people. But the issue is that the world pension funds and everything else is overweight bonds, especially US government bonds and other US bonds, dollar denominated, because that was the smart thing to do over the last 120 years. Now that is changing because of the end of the long-term debt cycle. And Ray Dalio is forecasting a reverse wave. So over the last 100 years, the dollar was a safe haven. All the money, if you wanted safety, went to the dollar, to the US government. They have pushed it too far, and the dollar will lose its power of safe haven, of reserve currency. Because yes, over the last 100 years, it was smart to put your money into US debt, and many foreign countries and the public has put their money with 21 trillion for the US public, foreign debt 6.81 trillion. China owns 1 trillion of US debt. The rest is owned by the Federal Reserve and government that is increasing as they are continuing to buy about 80 billion per month. So you can see here how globally countries own US debt. And the reason for that is that over the last 100-150 years, the United States have been the dominating force globally, economically, militarily. So really everything was evolving around the dollar, but now that power has been declining and they are taking more and more debt to preserve or to keep the situation as long as possible. But we are seeing new powers coming, new powers having a bigger and bigger share of global GDP. And if we look at GDP, so over the next 10 years, China will become the dominant economy in the world. And this might not have a big impact on the dollar, but what the US did over the last 10-15 years will have a huge impact, because if owning bonds is stupid, then people around the world will, and also Americans, will start seeing that something is not right there, and then is where we will have issues. And we have to be prepared for those issues. As the dollar is strong, it is smart to take debt in dollars. You can print your own dollars as much as you want, as long as you are the strongest currency in the world, as long as there is strong demand for the dollar, you can do that and you can buy services and goods no matter what. However, at some point, if you are not keeping up with production, with quality, with improvements, then the cycle reverts. This is typical. And we have to look at debt, money printing, and the balance of trade. Total debt, the public debt of the United States, if we look over the last 20 years, quintupled. So from 2000 and around 5 billion, we are now at 27 trillion dollars. Quintupled over 20 years. Did the economy quintuple? No, it didn't. And then with deficits, the government was strong. It didn't take deficits. It didn't spend too much money, or it spent what it had. But then, given the strength of the dollar, given that it was okay to take some debt, it started taking more and more debt. And that really exploded over the last 10 years, and it started taking debt like there is no tomorrow. Even before the COVID crisis, there was a deficit, yearly deficit of 1 trillion. And now the deficits are expected to keep being around 5% of GDP and then even increase over the next 20, 30 years, which is something totally insane. And just compare it to history, so much lower debt levels, a little bit for the World War II, but the rest much lower, and now it's just exponentially up. Government had to intervene by giving money directly to people, and the Fed's balance sheet simply exploded too. If we look at the trade balance, negative over the past 30 years, so more imports than exports, which means you are sending your precious dollars to someone else around the world and they are having them while you spend goods and services. And the issue is that when people around the world get what's going on with the dollar, the same things that created the strength of the dollar or the euro, the Deutsche Mark, will revert, and then you have a big crisis. Ray Dalio is warning us now, and I trust him that this is what will happen over the next decade. Things have already started to change. I've read on Bloomberg that the intensification of treasury selling comes from Asia when the Asian markets are open, and we see here how the yield on the US Treasury has been going up and up, while the Chinese yield is stable, which means that the market isn't happy with what the Fed is giving or what the US government is yielding because of the risk or the negative returns. And as this changes, more and more money will shift from where it is now, we said developed countries, to where the future of the development will be. From financial assets, from everything. This is the future, this is the past, and Ray Dalio is warning us not to get stuck into cash and bonds from the past. The thing is very simple. This is 5.5 billion people growing, developing, and we from developed countries, so-called now, we can't fight them with debt. We can work as hard, work harder, improve the technology, etc., etc. But what we are doing is more deficits, more spending, more stimulus for consumption, which is not increasing long-term productivity, which means that we are just digging a bigger hole under us. And Ray Dalio gives us two scenarios. First is that developed markets bonds, that 100 trillion of those bonds start to be less and less attractive for the market, which means higher yields, which means a disbalance between supply and demand, which means that the Fed, ECB, Bank of Japan will have to intervene more and more into that market by printing more and more money and consequently lowering even more the value of the currency. And if you just see the impact of 1% rise in interest rates on the bond market, so on the 30-year treasury, the value of that treasury bond falls 20%, and if it falls 20%, it leads to even more selling because you own these developed markets bonds for safety, for protection, as a safe haven. If those lose those safe haven attributes and currency reserves, the yen, the euro, then even more selling, even higher yields, which means that the bond bubble will burst. As I said, no buyers, ECB, Fed, Bank of Japan, more printing to buy and to try to prevent the inevitable. Another scenario is likely yield caps, so laws that regulate how the market works. And even if that sounds crazy, 1930s it was prohibited to own gold because the government regulated in the US things. We had yield caps, and also we already have capital constrictions, so you are not allowed to do whatever you want with your money. For example, Trump signed a bill that delisted some Chinese companies from US stock exchanges. That's crazy, but this is just the sign of how that long-term cycle, according to Dalio, evolves. The big power is losing its power, and they are doing whatever they can to keep that power for as long as possible. But it's, again, politics. This is my addition. Think, Trump, you are not allowed to own Chinese government-owned stocks. On the other hand, he doesn't complain that the Chinese government owns 1 trillion of US debt. Why didn't he say to the American people, okay, this year we'll have no deficits, we'll send $1 trillion to the Chinese because we don't want them to own our debt. So politics unfortunately leads to bad things because it lowers your return, because you are not allowed to own good Chinese stocks with higher yields, lower debt, better outlooks. And something to watch, and Ray Dalio gives us a big advice here. If the Fed keeps buying bonds with rising rates and markets and economy strong, and if we look at the treasury yield over the last year, we have rising rates. If we look at the stock market, we have strong markets and we have the economy really rebounding. Then you know there is no real demand for those bonds. So the Fed has to create artificially that demand already, which means that there is no real value in those bonds, which means that the bubble has already started to burst, which will lead to bigger and bigger consequences in the future. And we see that despite whatever is going on, the Fed said in the last meeting they will keep buying treasuries of 80 billion per month, 40 billion of mortgage-backed securities. And another indication of what's going on and the issues there is that when governments start adding more and more stimulus, the more stimulus you add, the less effective it actually is in reaching your points. And that is a second indication. Do we have more stimulus? Yes. Which is a typical indication of the late part of the economic debt cycle, which is something that we have to start think about now. And now it's a great time to start thinking about investing in the late part of the debt cycle. Why late part of the debt cycle? Because this is not sustainable. This is US debt to GDP for the government, for households, and for non-financial corporations, for businesses. You can see here the explosion in debt, and at some point you can't borrow like there is no tomorrow. This is an issue. This bursts and the dollar is gone as it is now. As Ray Dalio says, this debt is like radioactive waste that at some point you can't hide anymore. And when people get it, that the debt is there and it's radioactive, then it's like a run on the bank. Everybody starts selling, yields go up, and these people that own that debt really get nothing out of it. So think that you will lose a lot of your purchasing power from your pension funds. So think about building another pension for you. There is more and more printing, so Ray Dalio explains the market as people with a lot of funny money going to the casino betting on anything. That's the environment we are living in. Just look at YouTube and all the 10x stocks like there is no tomorrow, and like it's just free money that fell from the sky, which actually helicopter money is. And now on investing, cash is trash, bonds are trash if you are not the issuer of bonds. So if you issue bonds, then you are good because you are hedged against the inevitable. If you're a company, you just need to be sure that you have the pricing power to refinance those bonds. So that's the key issue there. If you start having troubles, then refinancing gets into your even more trouble. But some good debt, like a fixed rate long-term mortgage, might be an interesting position to hedge yourself for what's going on. Plus, just own non-debt assets that have higher yields than inflation and will keep that purchasing power. And Ray Dalio says to have a well-diversified non-dollar portfolio exposed to emerging markets and even China for protection to what will happen to developed markets. And another addition is that you can expect higher and higher taxes over the next decade. We have already heard from Elizabeth Warren her plans for increasing taxes. It might not happen soon, but it's very likely that it will happen over the next 5-10 years in the US and Europe to finance the deficits if Asia will not like to buy more and more of our debt. So my take is think out of the box. So what worked in the past, 60% stocks, 40% bonds, is certainly not the way to go. Start to thinking about owning real businesses because the value of the currencies is really in trouble. And let me just show you one example of trouble. So this is the copper chart. So copper was always trading in a range between $2 and $3 per pound, and then over the last 12 months it exploded to $4 per pound. Is this because of copper? Suddenly something happened? Yes, a little bit of exuberance, but it is because the dollar is expected to be valued much less. So real things, commodities did really well, and depending on the commodity, there are still some cheap commodities. You might find interesting protective assets, protective yields out there. I have to add here more emerging markets. I'll try to do that, so please subscribe to the channel for more interesting businesses. But if you look at Alibaba and compare it to Amazon, if we look at the price to earnings ratios, the valuations, Alibaba is much cheaper than Amazon. So you can click here, you can download this template and play around. You can see the valuations there for each stock, and you can also have the link to the research if you want to learn more, both on Alibaba and all others. So we're going to look at more emerging market investments. Be careful about what's going on in developed markets with currencies and try to build a great portfolio over time. Thanks for watching, subscribe, and I'll see you in the next video.